Good morning. Let's kick the tires and light the fires. Sorry, Top Gun. Woo! Look at that sell. That was a quick return to liquidity here. Let me get this zoomed in and centered. There we go. That's easier to see now, huh? All right, so we've got a critical support level right here in this bear flag, and we've wicked it twice. 439.25. Let's see if we break through. And if we do, we'll get a quick one for one down, probably to about 439.20. And extension would be down to about 439.05. The other scenario is we get expansion here. Very tricky trading here. Give this wedge another moment or two and we should have an answer on whether we can get a quick scalp or we just sit and wait. Ford's actually looking for a little bounce here. Micro double bottom. We've got a mean revision target of about 1522. Not a whole lot for running options, but there she goes, firing off. And finally, SPY broke over. Beautiful. One for one done. Nice. Ford made its mean revision. Watch for a pullback here, or we can continue up to the 1 minute 200 period as well. Go to 1525. And there's a nice hammer on mulling there. If you want to scalp a penny stock, this one's fun. Watch for a resistance break up here at about 29.4 cents. And if we smoke that, we could go and hit the previous high, about 29.9. That's already on its way there. Looks like we're getting full extension on a bear move for SPY there. Oh, I forgot to short that. Keep rolling. We might get a 2 for 1 out of this. There's one right here. 2 for 1 would put us down here to 438.20. And apologize for the noise in the background. My dog is scratching his cone of shame. There we go. Reversal right here. Let's see what we get. Probably mean revision. Look for 439.05. That take us to 44.40 even on the ES. All right, let me check a couple positions on my options chain stuff here. There we go. Got a 437, 435 put spread open that is just killing it right now. Opened it for 2 cents. Right now it's worth 29. That's a 1,450% return. And if it doesn't continue to drop here, I'll close that real quick, because that expires today. Let me double check where we are on my Weeble dope here. Right at the bottom of our known liquidity zone. How about that? Know your zone, guys. Know your zone. So if we crank this level, we can certainly go to the next fib line. We're looking for a 1-for-1 on the 1-minute chart, and if this breaks over, we're looking at 438 even. That would put my little options position in some pretty nice profit. Probably right around 2,000%. Just rolling past 1,500% so far. Paid 2 cents for a $2 wide spread is now worth 31 cents. Only on Robinhood. Here we go. Mullen running right past that previous high. 32 cents is on the clock. Cool, we got some excitement today, guys. Loving this. A couple little dojis sitting right here. We got a spinner, possibly a hammer. No dice. We're going to run that 1-for-1 looking like that's our accumulation. As soon as we break this low here, this 438.62, game on. We might actually get a reversal. Remember to trade the break, not the setup on this. If we get the full 1-for-1, it'll have to break here. And it's got to break its previous low, which is right up here. Looking at 438.60. And that's 44.36 for the ES. Yeah, we might get a hammer there. See if I can grab a quick screenshot of my trophy. And then close it. Bam, done deal. Nabbed that sucker just in time. That was pretty awesome. Cha-ching! That was kind of a YOLO play, paying 2 cents for a $2 wide spread, but I saw what was happening last night, and I'll show you why I took that trade. That is actually run on my Webull math over here. Yeesh, let me zoom out. So I noticed that we tested this liquidity zone once, and then in the close, I was actually able to get that thing just before the bell, knowing that this looks a lot like a double top to most, and knowing where this liquidity zone is, it was looking for sure to hit at least a mean revision or 1-for-1 down. So knowing that we were going to at least A to B this liquidity zone pretty open, I would have been happy with a couple 100% on the open if it opened here. But running this down, that's 1,450% down here, 2-for-1 leg done right to the base of our liquidity zone. How to find that? This wick right here. It's just splitting that rolling top right down to mean revision. So anyway, that was a pretty easy rolling top. I always say these things look bearish until they don't. Well, this one actually broke, and the key when it broke support was pretty much dead on. Worst case scenario, if it would have ended up being a bullish 1-for-1 and opened up here at 444, I lose 2 cents per spread times 100. Whoop-de-doo Basil. Now I'm sitting pretty. Bills are paid. Let's watch what happens with this little setup here. Looking like we're going to go lower. Get back on the fan here. Yeah, too many trades going on at the same time, guys. Sometimes I can do all that. Sometimes I can't. That was definitely a pretty nice trade, though. I'm pretty proud of that one. Oh, that reminds me. I'm still watching Starbucks, and by the way, Mullen just about nailed that target with a wick. 32 cents was my target. Bam, mean revision done. We might get one more play out of that. I'll certainly go back to it and look at it in a second. But I want to look at Starbucks real quick. I have a bearish setup on that thing, and it is just starting to creep into a known zone. Let me see here. Looking for support break right here, and we just barely broke it today. And we're looking for a breach of 98, and we got a target all the way down here to 88. That's a 2-for-1 measured move, and a big ass bear flag to kick it off. So if we remain bearish on Starbucks today, and it crushes that zone, look left. There's a 1-for-1 that happened here. Well, actually, this was a 2-for-1 on the way up, and we're getting a 2-for-1 on the way down if this fades. There's a short-term target here of about 92, which would be okay, down from 98. But the longer-term target is going to be 88. And I posted this in the network for Trading View here. I did post a alert on that. I stuck it in our watch list here at Bullishbrs. Pretty well known. And not a lot of people were really on board with that move. They're looking a little bit less enthusiastic than usual for this kind of setup, but I'm all about being a bear when it's appropriate. And I'm just going to wait for that to stay below that $98 target and see if we get resume trend into this block. All right, forward right at 15.14. We're looking for a possible 1-for-1 down to about 15 bucks, or we get a accumulation and continuation here. And let me get back to Mullen. Alright, mean revision is accumulating. Let's let this set for a few bars and see if we can hold this support area. If we can get one more push to 32. And if we get loose of 32, we could see a short squeeze run it to 35 pretty easy. That'd be a nice little 1-for-1. Don't need to draw the box, you just look at the range. So you got like 26.5 to 32. Mean distance is right under 35, probably 30, 34.8 or 35, somewhere in that neighborhood. All right, we did find some liquidity here, and I want to wait and see what happens with it. Wicked right out of that supply zone, or sorry, demand zone. This is going to be our short-term demand zone here. That wick. This is looking like a double bottom, but it's only a double bottom if it breaks R1. We've got R1 up here at about 439.05, and if we can't get past that, we will go and break over into a bear flag, and this will become another setup for a bearish trend. If we do break out above that, we just look left for our targets. Well, there's one big control bar here, and a return to about 439.40 is pretty imminent. And looking back into our fan, that would put us right up here against that next fib line. But the breakover, which is happening now, rejecting our 1-minute fib. It's great to know where all the supply and demand zones are, but it's also great to keep your price action analysis as simple as possible. Simple is fast. I can trade a 5-second chart with simple. I can trade a 1-minute chart and a 5-minute chart with simple just as well. In fact, we can pop over to a 5-minute chart and see a little bit more structure. So we've got a leg here, accumulation here. We've got one pause here, and if it breaks this, we'll get a full 1-for-1 down. That takes us quite a bit lower. I'll draw this and then I'll delete it because I don't want to dirty up the chart too much. I want to know where our target is. Well, that's not good. I just broke our previous liquidity zone. There it is. That target puts us down here 2 fib deviations below our common line, and that target's about 437.50. So if we put that into the ES, that gives us a target down to about 44.20. So let me get back to the 1-minute, and I'm going to delete this box real quick here. It's kind of in the way-ish. Alright, so far looking a little bear flaggy there. We got a bunch of wicks sticking right into that pivot, or right into that fib line. And Mullen setting up for a push. First control bar is going to be target, so let's go with 30.7 cents, and then a push above that can take us back to that 32, or just about. I love being able to scalp big stuff, little stuff, and medium stuff all on the same page. It's pretty awesome. Again, just keeping price action as simple as possible is going to be your gateway to being efficient and fast at trading. And then I always say that the more you learn these really small time structures, 1 minute and below, the faster you're going to get the repetition necessary to know those patterns by instant recognition. And you're going to see that they're applicable to every time frame. You're going to look at the same patterns in every time frame. Those are going to be what you trade. As I always say, it's not what you trade, it's how you trade it. All right, here comes our bear flag break threat right here. Support is going to be 438.60, and that's going to be 44.35 on the ES chart. Last chance for Romance to roll this into a inverse head and shoulders. But remember, you're not the only ones looking at that pattern. Lots of market makers are, and they love selling in liquidity on a trend day. Break that low, and we're gone. We're going for this 438 target, no problem. And short term, that puts the ES target at 44.30. Long term, 44.20. By that, I mean on the 5-minute bar, long term. I don't know a lot of traders who will put that in the same sentence. Long term and 5-minute. All right, so we went to about 31.42 on Mullen here, and we broke over with a tweezer. Pay attention to those. Those are reversals. That's a 2-bar reversal. Going back to mean revision, if it can't hold that 29.5 cent support area there in the mean revision, this thing will break over and sell off right down to the 200, probably about 26.5 cents. These scalps come fast. You got to know where your targets are. A quick way to get that is actually going to be something simple. Pull it off. You can pull it anywhere, really. Throw an angular in there. And let me see if I can subdivide this one. We could run them from the same point. And then I bet the regression line goes right to where we touched for our price target. If it'll let me draw one. Yeah, right on the money. Anytime you can throw a common trend line on from anywhere, and then you can throw 2 of them on where you have divergence, split the difference, you get price targets. That's what led me to working with this fast fib resistance fan. Now we've got a support zone right here as well. See, we break this, we'll make a measured move straight down out of this to our previous low. Well, there's a liquidity zone here. There's some buyers. If we hold this, we'll run back up to our regression line. Ooh, forward. Down to 15. And SPY, 438. Looks like our ES target, the 44.30 is just met. That's our short term. Long term, full 1 for 1 takes us to 44.20. For the hell of it, I opened up a couple eval accounts on Apex. And if this keeps up, I might just be able to get this one funded in a day. right down to our fib, 438.10. 438.02 is right in the midst of 2 bars away. When you're looking at your price action on these fib fans, you gotta remember they're angular, so as time goes on, those positions or those targets will change. Close my bear trade there. There we go. So you're looking at that little wick right down there, 438.04. If this was to go 1 more bar, that target stays the same, but 2 more bars, you go down a penny. 3 more bars, 4 more bars, you go down another penny. And in case you're just tuning in and you haven't watched me draw these things yet, I'll go over it one more time. Essentially, in TradingView, you get some wonderful drawing tools. The one I use is the fib speed resistance fan. It just looks like this. And you can find it right along in your tools back here too. And the idea is anytime you notice any sort of common trend line at any point in time that you can measure from, whether it's a consolidation or yesterday's price action, whatever it may be, you have to determine what the trend is. So in this case, we were bearish. Yesterday I had a bullish fan. Today we have a bearish fan. I found just 2 points. All you need is 2 points instead of 3 for this trend line. And you can pick this off and have a pre-market low target right in the mix. You've got a common trend line for a nice 1-for-1 target. Got the 2-for-1 target extended for a rare 3-for-1 target, consolidated, rejected the lower, bam, down she goes. But it gives you every measured move price target all down the line. Sometimes you can keep these on for a couple days depending on how volatile the price action is. I know Ford here, this is going on, what, about a week now? Let me see here. 1, 2, 3, 4, 5, about 5 days now. So a market week. And look, price is still respecting these fib lines. I never really use fib levels where you get the fib box. It shows you all the fib retracement lines. I don't use that, but I'll use these angulars because it gives me a very fast way to find resistance and support in any trend, whether it's up, down, or sideways. And all you need to do is find one common trend line, and you get everything you need in one drawing tool. If you haven't watched, I put a 3-video series on our YouTube channel that explains from beginning to end on how to draw these. First, you want to understand how to draw them manually. So that's the first video I made, is just drawing manual fan lines and understanding the concept. That's the same principle I used here for this penny stock. So learn that and then go with just a common pitch fan. Practice that, figure out where those levels are there. Because it's going to come down to how you trade these fib lines. You've got to know how they work and how each of these fan lines is significant. Then you can go in to learn how to draw the fib speed fan, and that's basically it. That's where you just find your one common line, lay this fan out, and you'll find every target you need. In fact, I think I'm going to draw one more or 2 more manuals on this one. So anytime you have a known fan here where you've got 3, you've got an angular resistance, an angular support, and a regression line, you can add deviations to that, and you just have to eyeball it. So you can take and range about, eyeball this, put it in here about the same range from line to line. Boom, you get one break line. Need a new target, new deviation. They all flow out of the same origin. All you needed was 2 points. know there's some supply zone here, or demand zone here. There's a wick. Anytime you see a wick on a candle, it's a failed breakout. And when the breakout fails, it's because a whole lot of limit orders took place. A lot of them were filled. There were a lot of limit sells and limit buys in that tiny little wisp of price action there. So whenever you see those, I always recommend just drawing a box around them. And now you've got a 1 minute supply zone, or 1 minute demand zone. Sorry, I get the names mixed up, but you know what I mean. All right, we have potential for a short-term reversal here, but this is just looking like a pause on the trend break. That's a bear flag. Let this reject its previous low, 438.13 in this case, and we can resume a bear trend. Looking at our 1 minute fib line, it's pretty evident. It's looking more like a pause. And we have an extension target on the ES down to 44.20, and currently that puts us in 2-for-1 mode. On our SPY chart, I'll draw that again. So there's 1-for-1 done. 2-for-1 would be right down here. Target of about 437.28. Got a little feedback loop there. There we go. All right, here comes our break. And I always say that. Don't trade the setup, trade the break. Wait for this candle to close. It'll give you a clue. Got about 10 seconds left. Boop, there she goes, breaking low. Let's see, it's about 5 after 10. Let's see if I can get the news wheel open here. Looks like the Fed's going to shrink the balance sheet. Duh. Let's see, PMI 53.9 versus 50.3 estimate. Yeah. Well, I mean, it means they're going to buy a little less. So technically it's quantitative tightening, but I'll have to pull up the central bank balance sheet trend and see. Oh, do I have it up here still? Let me see. Put call ratio. I got too many things open. I'll have to pull it up later, but you can look and see what the central bank liquidity is by looking at their balance sheet. And you can see when they're buying and when they're selling. No problem. I love these fans, guys. Since I started drawing these, my price action trading has like improved 100%. I was already pretty damn good, not to break my arm, pat myself on the back. I started drawing these, and it's just like exponentially better. So you can nail targets so stinking fast with this stuff. break, let's go. Love trend days. Some of you may be asking, why didn't you keep that debit spread open? Would you keep it open with that kind of return? That's a 1,450% return. I think I'm good. The chances of it bouncing off any of these support zones, no liquidity zones, how am I to know it's not going to come in and bounce back up from this support line? I mean, yes, price action would suggest it's very likely, but if you're holding risk and you see something that starts to resemble a reversal, do you want to give back 1,400%? Hell no. Take it. That is one incredible return. You don't have to care that it's going lower. You don't have to care that your long leg is going to be in the money. No damns given. You see a return like that, you take it, because sometimes you will be a little late to the party, especially in an opening range, and all of a sudden it'll rip your face off and run right back here, and then you give it all back. Especially when you're holding something that is like expiring today. You know, you've basically YOLO'd into it for a it could happen type of trade position. Yeah, you take that. You take that and you run with it. You don't care that it keeps going lower. That kind of discipline is going to make or break you as a trader. Um, if you can't just take profit when you see it, and especially when it's a number like that, dude, you're never going to get it. You've got to get over that hump. Do not FOMO into thinking, well, if it's gone this far, it could go this. No, dude, that expires today. Get rid of it. Don't care. No, no way to care about that. Just go. And then there's futures trading. This stuff is much easier with futures trading. You can pick off each of these little candles, every one of these 1 minute candles with the futures easily. You say, okay, well, we've got L1, H1. Let's trade from L1 or L2 at least to H1. Boom, quick bull trade, done. Let's trade the breakover on rejection. Wait for this candle to close. Let's go short. All right, we've made a 1-for-1. There's one leg, accumulation, two legs. Close the short. You want to run long here? Probably not. I'm going to wait for this pause to resume a rejection off the 20 period. 8 period would be preferred, and then go short again. Then you get another 1-for-1 right down to here. Pause. Take profit. Rinse, repeat until the trend ends. Just scalp it. I love that saying so much that it's on a t-shirt for me that I literally had a friend of mine make for me. All right, Mullen, here's your supply zone, or sorry, demand zone. Look at how it respected our angular and our demand zone, and we're coming back up above that zone. We'll test it one more time. We'll see if this will go back into this region here. Probably going to add another split or two to our fan here. Can add one here. And even if you're not great at drawing these on large caps, because they do tend to be a tiny bit different on large caps as far as being able to have an easy time spotting them, find whatever penny stock has the highest pre-market volume and draw one there. It is like clockwork how fast and easy these targets can be laid out on a penny stock, and you'll start getting lots and lots of great practice with this. Plus, you don't have to trade a million shares of this, or 1,000 shares, or even 100 shares of this. Well, at that 100 shares is what, 27 bucks? Very minimal risk for most people who start out trading. But when you start to get the feel for the price action, that is the key. So you can find where all the support and resistance zones are. You can lay out a fan and just trade target to target. It's real easy. You can go long or short. Be careful shorting a penny stock because technically your risk is infinite. Sure. But it certainly is not above the realm of impossible. It's definitely possible. But you can at least trade the bearish moves. This morning star was just clean. We got a nice control bar down, a big spinner, developed our demand zone, and then boom, revert right back to the top of that sucker. That was a quick scalp, and then got a 1-for-1 out of it to boot. So I mean, real easy price action can be found with penny stocks. All right, we tested just about the middle of our known box here for price target. That's just the bottom of a 2-for-1. We've made a mean revision here right back to that fib line. So let's see what the next candle brings. Either we'll get a quick 2-bar down, run to the wick, or we will break this and run back up to our next resistance zone up here at about 438.50. Didn't quite meet our 44.20 target on the ES, so that's still kind of unfinished business. We could very easily reject here and break it over, but don't FOMO that. We know where the target is. We need to wait for the break to tell us to trade it. And this zone here is this zone here. We've A to B'd that in the 5-second chart. That's kind of weird. Why does it skew that? I don't understand that one. Oh, it's not actually there. Okay. The wording kind of confused me here. I thought this went down further. But no, we came back to the top of it and rejected over. Let this candle close and it should give us a signal. There it is. This is a typical bar spinner bar possible here. So we got a bar, which is a big old Tootsie Roll. We got a wick on either end of it. We've got an inverted hammer here, although just call it what it is. It's a doji. And either we'll get a bar doji bar where we get above our fib line and run up, or we get a 3-bar where we run back down to the base of this bar. The output of this is typical. So if we get kind of a evening star looking pattern here, we can get a quick bar play on this range. But if we print a bar spinner bar, then we just get a quick little bullish 1-for-1. And it's starting to look a little like that's possible, but let's get really in tight on this 5-second chart. We'll see exactly where it breaks. This might give us a reversal here. We're off the 8 period here. Printing dojis. We might get this as an accumulation, and then a quick bar would take us to about 438.15. This is the setup, though. It's not the break. Got about 10 seconds. We'll see what we get. And bam, bar done. That fast. That is not something you want to try and trade. So what's our next setup looking like? Well, we've seen this before. Watch for accumulation here. If we accumulate here, we should get continuation on this trend, or we could get a short-term reversal here. But the first target is going to be easy, mean revision. So 438.48. Or if you're looking for mean revision on the ES, that's about 44.34. That is probably the fastest 1-for-1 you could ever see right there. That's a 5-second bar right there. Blam. They just ripped that. All right, so we're getting a mean revision of this 1-for-1 here. Let's look for a test of 437.85, and then we'll see if we can resume one way or the other. Either we get a reversal and we start running back up to this fib, or we get a breakover and we continue down to our unfinished business of about 44.20 on the ES, or roughly 437.30 on SPY. The numbers aren't quite jiving between futures and SPY anymore. Haven't been for, shoot, almost 2 years now. Very good, sir. I have a message from someone. Oh, yeah, I forgot to enable the chat on YouTube. I'm sorry about that. We have like pre-built stream keys on YouTube, and sometimes I forget to change the settings to what we want, which is with the chat. But we can chat on the Discord channel. We can go into the main chat there and hang out. So if you look above the live stream for our Discord channel, you'll see main chat right above that. That's where I throw all my stuff. All right, mean revision was done. 437.80 met. Now we're going to accumulate, and we're likely to find ourselves with a little reversal here. If you're looking at the Bollinger signals there, you don't always follow those. Some of them are pretty erroneous. On a 5-second chart, they tend to be. They'll give you a pretty good read though. So I mean, like when it says -2 or +2, it's telling you 2 deviations from the band poke, whether it's an upper band or lower band poke. So 2 deviations is to the 20 period. So here we have short entry, 2 deviations minus, right there. So that met its target. This one here is a long entry. Not really worth it. Short entry here, okay. We're through the 20 period. Not the best trade, but certainly a good area to get short because that is the top of our resistance level. I'm going to go grab a quick cup of coffee. I'll be right back. All right, did I miss anything? Of course, we missed the break. We're at support again, though, so we're going to hang out here. Give this a couple minutes. We should see finished business down here to our 437.32 target. Kind of takes us to our 5-second fib line right in here. And on the ES, it would finish that move to 44.20. Got Mullen breaking down below the demand zone here. Now it's in trouble for a trend and likely to run a 1-for-1. Let's see where that leads. I'll just draw this one. So we've got trend to here. 1-for-1 takes us down here to about 21 cents. Certainly we could throw a couple bars out or a couple of fans out. So we got one about there. This one's a little steep then, so this might be a little outside the range, but it's possible. Ford just barely hung on to 15 there, but we're starting to see a slight trend roll. And let's see, known support is down here at about 1481. See if this gives us a bearish 1-for-1 after all. This is looking like accumulation. And we're likely to split a move here. I'll just draw the box for you. So this would be one leg. When you come to find these, find your high, take the low to about the mean of the accumulation itself. So if we've got a split between here and here, kind of put it in the middle. And you don't have to be dead on, just be kind of close. Just eyeball it. Take that, set it down here. Gives us a bear target real quick of 1480. Same we got from previous price action low. All right, let me get into futures chart for a moment. There is a big limit order sitting exactly at 44.20. Imagine that. How big is that thing? Let's see. 543 contracts sitting right there at 44.20. It's kind of cool when you can use price action to get exactly to where all the institutional traders are sitting with their big orders. There's another one there at 44.2250, but that one keeps swinging around. Typically, they'll space their orders out in whole nickels. They don't go in between. All right, threatening to be a double bottom, but not quite. We know we'll at least dip that low. Am I making it look too easy? I just love price action, that's all. If it looks too easy, it's because I've been doing it for a while. All right, make it or break it right off this 8 period here. Let's see where this bar closes. Got about 20 seconds. We have the 5-second 200 period right there. One rejection. Let me zoom in on that. 5 seconds left. If that's a spinner and it rejects the 8 period here, we could very easily break over here. That is a spinner. Watch for this to be a bar, and it needs to breach the previous low of the wick of that little spinner there. This guy right here, or Tootsie Roll, whatever you want to call it. Don't need names, we just need to know where it's going. 20 seconds left. Let's see if this bar splits and gives us a quick signal to take the rest of that 1 for 1. Oh, Victoria, you got a hot mic. There's our bar. Now we just need to break support. Come on, finish our business. I need to close my short. I might need to mute Victoria for just a moment here. There we go. All right. Oops, I didn't even have desktop rolling anyway. There we go. Kind of falling off volatility here. We don't have a whole lot of volume in these. Notice the volume's just shrinking. Well, what's that do for our Bollinger Bands? They pinch. Usually when you get a Bollinger Band pinch, it usually precedes something big about to happen. We call these pinches, or, well, pinches. You got volatility nice and wide here, and then everything comes to a point and focuses in this little tight area. When those bands get close together, usually you get a snap one side or the other. So you get a signal here pretty quick. And so far we got a poke up here, and we're just starting to see those bands just creak a little bit wider here. There we go. And now we're in our signal. Now we're cracking our low. Let's see this bar here close on the 1 minute chart. We got about 40 seconds. And if it can't break our support zone of this control area, we will fail to meet our bear target and we will bounce here. This is looking a little bit more like a double bottom. That tight pinch is kind of the precursor to a quick snap one side or the other. This is a little range right here. So this is no trade land. We wait for this. Bam. That bar is now above R2 or R1, which is also H1. So you got low 1, high 1, low 2. We've broken high 1 with a control bar. Watch for a mean revision down to 437.60, 437.62, and it can happen with just a wick, and that's going to touch the 8 period here. Got about 35 seconds in that. Might not even get all the way there for mean revision, but you'll get a quick 1 for 1 out of this typically. And if we were looking at our 5-second chart, we get targets from these control bars in this trend here. So if you look at my cursor crosshairs there, we're at target 1 already. This is R1 or H1, whichever you want to call it, because you got low, high, low. That's a double bottom. Now, we've achieved target 1. That's this bar here. There's an accumulation expected here, possibly a mean revision. And then oftentimes you'll get a mean revision of the accumulation itself. So if you take your difference between low 1 and high 1, kind of split it, that becomes a support zone. So it's just 437.60. So this goes double bottom. There's your quick bull trade. But there's also a possible bear trade here. So if it rejects here, you can take this as a pause in a trend and run it to the next low. It's a very quick scalp. Usually it ends with a quick 3-bar. Here's a little triple top to boot. And again, this is wait for the break. Don't trade the setup because this is choppy as hell. Very challenging trades. There, we wicked right to our mean revision. That is the mean of the accumulation, or the mean of the range. If it can't snap that 437.60, no bear trade. If it snaps it and then goes below the previous lows, down here below 437.50, you get a quick bearish 3-bar, which is, in this case, a 4-bar, but you get basically a repeat of this range here, right down to about a penny or so at the level here, and then the break will give you a full bar down to finish our business. So you get a very microscopic bull trade and a bear trade. I like to use the reverse button when I see these. It's not a good habit to develop if you're a newer trader, but if you're very quick, you can take a long entry and then hit the reverse button right in here and take the short entry without ever leaving a position on the table. However, you got to know these are going to be market orders, so you're going to miss some of this. The wicks will probably not fill your order. Your order will probably fill in the body of that candle. So you'll be giving some up. It's better to trade it with limit orders. So you would have a long entry here. You would have double your long entry close here, and it would work just like a reverse button, but with a limit order. So then you would say you go long 2 contracts here, short 2 contracts here by making this order a 4 instead of a 2. And then you would sell your 2 long contracts and then sell 2 contracts short and trade that bar right back down to support. All right, threatening our break. We're right in our low, 437.50. This can give us our quick 1-for-1, although it's a very short-lived 1-for-1. This is your leg here. So this takes us to the bottom of the box, and that is just a part of our 1-for-1 from here. If we can't break this, it can sit here and accumulate half the day. Kind of hovering around 44.24 on the ES. Very risky to jump in a trade on here, but if you're very quick to scalp this, and you can scalp it by watching that 5-second chart. Here was our Bollinger pinch. There's our signal right here. Long. You can continue long if you wanted to take it to the high, but I'd just probably kill it here. You can set a limit order at the expected target right up here. However you want to do this, there's a slew of methods here you can use. And if we breach our previous high again, we could see this actually shake out to be a reversal, and we could start heading back up. Let me pull out the Weeble chart and see where we are on my dope. Well, we're a full measure below our known liquidity zone. Like if we were to just kind of block this, we've made an equal move, see? Just about. So if we get a 2-for-1 out of our breach of that zone, we could see this go even lower. We could see a target down here at about 436.20. Well, the ES, let me see if I can get a 5-minute chart up here. That gives us 2 for 1. And that puts us at 44.05. Yikes. So if you look in the chat, I'm going to open up Victoria's mic. There we go. Sorry, Victoria, I had to mute you. So anyway, look at my post earlier this morning. I said, let's see what the opening range does first, but we could be setting up for a bearish trend day to 434. Well, that 434 is our old friend, the orange zone here. 2 for 1s are pretty common. 3 for 1s, not very common, but they do happen. But a 3 for 1 would take us pretty close. We get down to like 435 maybe. But 434 is a known liquidity zone. And if you look back, it comes just below our revision of 2 for 1 revision right here. This is our accumulation. We could see it happen today. But we're in the area where we'd rather not be taking a swing trade entry. It's already pretty much missed the swing trade entry, but you can still scalp the trend. There we go. We're in the box. Get back to our fans. Here we go. We've reached our first target, which is this guy here, printing a hammer. But we have also breached our low and began the next step in the trend. Take us down to our key support area. Let that close. We got a bar coming back to revision. Let's see if we reject the 8 period one more time. We'll either get one more bearish scalp out of this off rejection, and that takes us to the previous low. There's a pivot here, so this is both support and resistance. Right now it's resistance because price is below it. So we'll either get a quick bear scalp or we will accumulate in this area for a little while. I'm willing to bet we're going to get a tweezer right here. So watch for a revision of this entire bar. Be a quick 3-point scalp on the ES. Sorry, 3-tick, not 3-point. So take us down to about 44.23. There we are. Boom, that scalp's over. Now let this bar close. We've got 15 seconds left. If we get a nice tweezer here, we'll likely get a complete leg out of this where we end up at about 437.12. So far, my eval account is up $1,000. See if we can make 3,000 in 7 days. Just been scalping the range a little at a time. watching this 5-second chart because we have the makings of a support test here. So the bar scalp is done. We've got inverted hammer. What's next on the agenda? Well, this is a very short-term mean revision. So look for a quick push to about 437.45 and then rejection down a little lower. Let this accumulate a couple more bars though. We might not get that. We might just get a breakover. Got Mullen respecting every line in that fan beautifully. There we go. Closed a wick. Good. Let's see where we go with this next. Bam. We got a spinner. Very likely to reject the 8 period here, but wait for the break. Ah, Victoria. It sounds like yours.
Oh, sorry. Am I on push to talk now? Yeah.
Yeah, it's working.
Great. Sorry about that, guys. I was in the middle of trying to chat to my colleague while I was there on a hot mic. Sorry, everyone.
No worries, no worries. You didn't even drop an F-bomb. You're good.
I'll try harder next time.
There you go. Gotta give everybody the notion that you're from Soho or something. Just kidding. That's about as much as I know about England there.
No, we swear everywhere. Trust me.
Oh man, yes. Not quite as bad as the Aussies though. My goodness. Oh,
Yeah, there's breed.
that's some of the most entertaining stuff. Have you ever watched Aussie Man videos? That guy's my hero.
Yes. Yes, he's brilliant. I love him.
So funny. Every other word in the sentence is either C or F. It's just over and over again. It's the most laugh you could have in a while. If you've got a dark sense of humor, that is. I mean, some people are a little sensitive to that. I can understand. All right. Well, we tested support. We've made another little double bottom here, as little as it may be. Come up above R1, and target 1 didn't quite get touched. We are likely rejecting R1 here. Let's see. The mean is going to be about 437.44. And if we smoke that, we'll get a quick bear flag breakover and go back in the box. It's looking a little weak for our trend here, though. Let's go look at our Weeble dope here. Kind of dipped into this box for the 2-for-1, but we're just kind of playing around here. We do have news at 11 coming, I think. Let me get the news wheel going. Oh, what was it? Oh, yeah, EIA, gasoline. That'll make us move. Let's see what happens there. Don't know that report will be volatile enough to shoot us down for a 3-for-1, but it's possible. And remember, if it gets really bad, we know where the next liquidity zone is, and that's way down there. There is a short-term zone, though. We're looking at a 30-minute chart. Pay attention to these wicks. They are a failed breakout. That's where all the limit orders happened. We may very well hold this area. I'm going to make this one a little less visible. That way it doesn't fade over our short-term stuff. There we go. So that's 436.40 roughly for support. But there is going to be a little demand here. Get back to the fan. There we go. So we broke our mean. We went down to the base of the structure, came back up. If we reject the mean here, we get a quick entry for a scalp down to the support again. The other scenario is if we go through the 200 period here, we get a quick bullish 1-for-1 right back to the resistance level. So watch this little accumulation. It'll give us a quick clue. Even though we got a little pin bar right here, we're looking likely to touch at least the next resistance zone. That's this control bar right here. Boom, just did it. Every time frame you see a trend, every time there's a big bar in there, it's a control bar. So you'll see price will tend to repeat it on the output side of the revision. So you get one bar there, next bar is up here, and then there's a intermediate area right here. This is accumulation. So we'll get a quick rejection off accumulation back to mean revision of this bar, and then we wicked right up to the mean revision of this bar. So this is rejection. Now we're likely to come and trend under the 20 period with the 8 period breakover, and that'll give us our signal. Well, what do we see? A little head and shoulders. It's very microscopic, but it's right there. We got left shoulder, head, watch for a quick push, right shoulder, and then a break. The head and shoulders pattern is also going to be in that 60-40 rule. They do have a 60% chance of follow through, but they have a 40% chance of failure. And what's the failure scenario? Well, we get leg accumulation, leg. So we get a quick break up to 437.75. Wouldn't be too good for bears. What do we have here? We have a bar, a spinner, and there's your 8 period. If this breaks the 8 period, likely it'll target right down here, base of the bar, 437.38. Quick little Busby or 3-bar, evening star, call it what you will. We just want to know where it's going. The other scenario is we get bar, spinner, and equal bar above. Where do I want to be to scalp this? Well, I'm going to wait for the setup to finish. I'd love to see one more rejection off this angular here. This is our fib line. Got 1, 2, 3 rejections. There's an old adage, if you keep knocking, eventually the door falls down. Well, we've knocked it 3 times. This is 4. Typical waves in Elliott are going to be like 3, 5, and 7. 4 is not as likely to break it as 5 is. 6 is not as likely to break it as 7 is. But if 4 rejects it, we'll likely get a wave 5. So watch for your support test. It's going to be about the bottom of this bar. And then if we get the 5th wave, we'll go up and test this one more time. At one point, I had spent a lot of time looking into Elliott waves, and it helped with trading quite a bit, but it didn't find any form of accuracy until I started drawing angulars. Because it made sense to me to where anytime you see a trend, whether it's up, down, or sideways, it's always a range. So if a trend is a range, and you're seeing a range right here, you got high, low, high, low, high, low, you can draw an angular through here, an angular through here. all ranges break. And the application of Elliott waves is going to be your 3, 5, and 7. And some people will call them Fibonacci waves too, but whatever. All we need to know is how many attempts do we get in the channel before it breaks. Typically, it's going to be a 3, a 5, or a 7. You can kind of start your count back here if you wanted to, but this one overshot. So if this were 1, 2, 3, 4, 5, 6, the likelihood of bouncing back up here for 7 is pretty high. Let's check our support lines. We got 1, 2, almost got to 3, 4, 5 to support. Hammer found our extension of our 3 for 1, this block here. It's almost acting like a demand zone now, isn't it? Probably applies to our dope here too. Yep, right there. That'd be a demand zone all of a sudden. And here comes wave 7. By the end of the range, when you get that final Elliott wave, you usually get a break. Being that it's 10:53 now, and we're expecting news at 11, kind of makes sense. So we're looking for, 6 more bars? 6 more 1-minute bars will break this range. And it will either A, break and revert to a mean revision, or B, it'll break and finish our 3 for 1. And I'll stick around till about 11:05, and then I'll call it a day because I'm pretty happy with my scalping this morning. Just 5 more bars, or 5 more 1-minute candles. That's looking like a little Busby there, but we just broke its support level, so watch for a reach to this wick here. Boop, done. Looking over at our practice target over here, our little penny stock, we've made most of a 1 for 1 out of this reversal here off of this fan line here, and it completed right up to here. This is the accumulation, so we could get a quick push right above to about 25.9 cents. But if it rejects here, mean revision is pretty eminent, so like 24.2. when you're trading in tenths of a cent, it sounds ridiculous to try and practice your price action trading with that. But all you need to know is what the structure is doing. So in my theory, everybody has what they know as trader's tuition, the amount of money you lose before you finally figure out how to trade profitably, right? Why not scalp a penny stock and cut that risk out of the equation? So instead of giving up, some people give up 20, 30,000 before they realize, hey, I suck at trading, and they give up. You go and you trade like 5 or 10 of these at a time. I mean, that's very, very little money, right? It's 25 cents a share. Give it a break. You want to develop the process of being able to identify price targets and learn how to trade price action. Go trade 4 or 5 of these. Figure it out. And essentially, as long as your brokerage isn't charging like ridiculous commissions for your trades, you can still at least make your commission money back. Or in the case of trading with a commission-free broker like Robinhood or Webull or a couple of the others, you get the practice for free. So, you go and you trade 4 of these at like 22 and a quarter cents, and you sell it at 25 cents. Well, that's a pretty nice little profit, right? So every penny in a 10-cent stock is a 10% move. Every penny in a 20-cent stock is a 5% move. You made a 5% return, and all you had to do was identify price action. In the meantime, you've developed the process for analyzing price action and taking very clear definition of risk to reward and developed a process out of it. I can't recommend it enough because a lot of people just reject the idea of trading penny stocks, but when you learn to scalp price action on a penny stock and you figure out exactly how to find all of those price targets, that is going to better prepare you for trading this stuff, the big stuff, because you're going to be able to learn the hard way and you're going to be able to find it a lot easier to recognize all the patterns you're looking for in price action on the large caps. Practice here, risk a lot less loss learning the process. Don't go taking size of 1,000 or 2,000 or something like this. Just do a few. You really don't need that much. You want to develop the process more than anything. Those little 10-cent stocks, you can go to pennystocks.com and find a big list of them. I like to narrow it down to penny stocks trading on the NASDAQ because they tend to have pretty good price action accuracy versus, I don't like trading OTC and I don't like trading penny stocks on the S&P because it's, well, not the S&P, the other exchange, NYSE, because they have different rules, but they tend to run delisting below $1 on that, whereas the NASDAQ's a little more forgiving. So a lot of penny stocks will survive a little longer on the NASDAQ than they will on the NYSE. Long story short, though, you want to develop the process, and that's the idea. So you take a few shares of this and you trade it. Whether you're going long or short doesn't matter. If your brokerage allows you to short, five shares of a penny stock, more power to you. You can catch these little bearish trades just like you can do the bullish trades. Practice that. Take that knowledge into scalping SPY options or scalping forward options or whatever you're looking at. Or the other path is going into futures. You go and take that process into futures, and suddenly you're going to realize that this price action that you learned the hard way is going to really kick ass when you start trading MES. You can go into a couple brokerages like Trade of Aid or God forbid Ninja Trader or even Iron Beam or some of the other lower margin requiring brokerages. You can go into there with a reasonable account would be about $500 or so. If you've got the skills to really scalp well, you can do it with as little as a $200 account. So you have some very tight loss acceptance there. Once you've developed your ability to scalp penny stocks, you can take that right into the MES and just trade 1 or 2 contracts at a time. You're looking for like little $2 and $5 returns. Just repeat the process. And then eventually that account balance will grow enough to where you can start trading 2 or 3 or 4 or 5 MES contracts at a time. Before you know it, you're trading ES contracts 2 at a time. So, I mean, you'll get there. It's just a process. Develop the process first, and then adapt it to other equities or um, other means of trading, other products. That's what I was looking for.
Federal Reserve Board issues enforcement actions with Herring Bancorp Incorporated, Quantic Bank Acquisition Corp., and Quantic Bank Holdings Corp.
11:02, and we got pretty much a nothing burger out of the EIA. Gas reports, nothing really moving. Yeah, it's pretty much expected. Nothing really big on news. Nope, just a pretty mundane move out of that, fortunately. All right, I'll give a quick recap and then call it a day, I think. So let's go and look at what we're expecting for movement on SPY. Give me my mouse back. There we go. Start with the 2 hour and work our way down. So we know where the diamond pattern is. We know that typically price does not like to spend a lot of time in the divergence zone output side of a diamond pattern. We did spend some time in the bear channel, and then we broke out of it, made some very clean measured moves up to the top, broke the high, and then now we've rejected and ripped a face off to the downside for a revision test. Well, let's look a little further into this. This looks a lot like an M-top. This can be our ultimate target, about 432. If we break through these known liquidity zones, we can certainly hit that, and that would be a beautiful M-top trade. The chances of this reversing here still remain, and this is where our known liquidity zone is in the mean revision. So we have a 1 leg, 2 leg, mean revision's about here. So if it holds around 436, 437 and reverses here, we could see this run back up to our supply zone up here at about 440 to 442. So just be very nimble with today's price action going forward to the close. For the most part, I've got a lot of great bearish trades on this morning. I can be done for the day, and I'm probably going to be done for the day based on that. But looking at options trades, not a great time to strangle or condor SPY. We want sideways to do that. Doing it here was great. I took some bull trades, sacrificed the losing bear trade for a loss completely, but the win on the bull side killed it. Completely covered my losses, plus 200% overall return. Got into another neutral position on our short day, but didn't really do well over the weekend or over the 4th of July hold. And then I was able to kind of close it for break even, but right at the end of the day, I was able to go and re-enter the Thursday expiration put debit spread for dirt freaking cheap. I was very confident that we were at least going to open up down here at the bottom of the liquidity zone. Boy, did we. And took a massive return on this move, percentage-wise. Only had 100 of those contracts open, but I mean, $200 risk to return a $2,700 return. Not too bad. I can live with that. Anyway, that's about it for today. Just kind of be nimble. Definitely be aware that this can bounce around in this zone for most of the day, and eventually we will either cross an A to B here and revert this entire trend for a mean revision, or we will continue to be bearish and set up one more leg down. The other possibility is a 100% revision, which would be all the way up to about the middle of the supply zone. So 441.50 to 441.80 is possible on a reversal here. So certainly be nimble. Be careful with what you're going to see for the next part of the day. towards the middle of the day, if we're sideways enough, you could theoretically build yourself a condor in that mess. Probably run Tuesday expiration for safety. You'd probably be right at about a $20 range on a condor with the right risk to reward ratio and a Tuesday expiration building a condor into this. Ideally, you'd rather exit that position tomorrow and roll it out possibly to take some profit if you were going to do so. But definitely be nimble because things are going to start walking pretty quick here towards the middle of the day. Anyway, that's about it for me, guys. I'm going to take my eval account and just park it. It's doing great. I don't need to be in a hurry to get that thing to fund. If I really wanted to, I could sit here and scalp this all day and probably have it funded in a day, but I'm pretty damn happy with what I've done with it so far. This was easy. All right then, guys. I will see you tomorrow. Have a wonderful afternoon.